The document that I have in front of me is for Dynamics NAV 2013 because it's the most descriptive. Once you go back to your office, there may be some features that I display today and are in this document that's not available in your version of NAV/series because all of you may not be on 2009 or 2013. The topics in here that we're going to cover today, we are going to concentrate on these types of costing methods. We're going to concentrate on FIFO, average cost, and standard cost. So those are probably the most common. There's other costing methods like LIFO, and the database that I'm using is a series 2009 database. So some of you who are not a food bank, you are a for-profit client, you'll see some terminology in here that you won't see in your database. That's okay. The concepts are the same for costing, basically regardless of what type of client you are. So we're going to start with costing, i.e. valuation of inventory. And how we're going to approach this, we're going to first start with the setup that controls the costing. And also, I'll mention again, there may be some features that I'm showing that's not available in your version of the database because, again, this is a 2009 database. So you will see here, this is the RTC interface for those of you who are not in the RTC interface. And I'm on an item list. And you can see that I've set up two different types of items. I have one that's called FIFO and one that's called standard. I could also set up a third one called average. But let's go ahead and open up the item card. Alrighty, if I come back here to the item card, you will see the costing method. So in this one, I selected FIFO, which all of us know is first in, first out. So we're just select the costing method. What most people confuse when they select the costing method is that they then expect this unit cost field to be always based on that costing method. This unit cost field will ultimately get updated based on your costing method, but for the most part, it's a placeholder. It's a placeholder for this reason. If NAV/series had to go through and basically do all the layers of your costing method, whether it's FIFO or specific and or if it's even average, it would slow down the processing speed. So for example, if you were doing a sales order or an agency order and it had to go through all the layers to get basically the right cost, it would really slow down the system. So instead, this unit cost field is used as a placeholder for transactions. So for example, when you first set up an item card, you can input a value in this field. Some sites do it, specifically food banks, if they want what they sell this item for to be based on this unit cost. This unit cost is then going to be the placeholder that is used for costing on a sales order / agency order or even in the item journal based on the type of transaction. It's a placeholder and it gets updated based on transactions you post and when you run the adjust cost. So in this example, since this was a new item, I was able to enter an amount. If it was wrong, I can update it. Once you have posted transactions, you cannot manually update this field. The system will update it. So for those sites that basically do cost plus on your unit cost field, it's important that you do put a unit cost in here initially if you want to calculate your fees. It's also important that you put a unit cost in here if you want this cost to show up on your sales or agency orders. Typical example is that you may be purchasing this item, but you may be selling it, distributing it before you've actually invoiced the purchase order. So you're going to want to put a value in here so it does some costing. When this updates, it's based on your different costing methods, excuse me, not your costing methods, but your inventory setup that I will show you here in just a bit. So again, this is a placeholder that updates when you post transactions and or when you run the adjust cost. You can initially put a value in here, but you cannot update it once you start having posted transactions. I'm going to take it back down to 10. When I do that, notice how my unit fees change because I'm saying my unit fees are 10% of my cost. Other fields that we have in this database, USDA value, this is for food banks only. This is a placeholder to basically store the value of your USDA product. Other cost fields, last direct cost. This field will come from a purchase order, commonly a purchase order. This will flow from the last direct unit cost field on the purchase order. It's commonly or regularly that the last direct cost can be different than the unit cost. The unit cost is going to display your layers of the value of your inventory. This is going to display the cost that you last purchased this item for. So that's what it looks like when we have FIFO. You'll notice because I selected a costing method of FIFO that the standard cost field is grayed out. The standard cost field is grayed out unless your costing method is standard, and I'll show you that in just a second. If I were to change this to average, then I would put the unit cost, which is my average cost. So the unit cost, you can input whether it's average, LIFO, FIFO, or specific. Standard cost, you input in the standard cost. I'm going to go ahead and change this back to FIFO. You also see this button, which is called the ellipsis button, which is a drill down. Once you do have costs in here, you can click down here, and it will display the different amounts, and it will show you the different layers. We don't have anything yet because we don't have any transactions, but we'll come back to this after we do some transactions, and you can see the layers. Before I move off this item card and go into another item card to show you standard cost, ultimately where the value is stored in this version is called value entries. Value entries came about, I believe, in either version 4.0 or 5.0. So if you're on a version before 4.0, you won't have value entries, but you'll have your item ledger entries. But in this version, where the value is stored is in the value entries. So when you run your inventory valuation report, if something looks odd, you can go look at your value entries, copy and paste them into Excel. You make sure it agrees with your inventory valuation report, and if it does, then start looking at the entries. So where do you get the value entries? It's under Item, Entries, Value Entries. And if I come into Value Entries, I'm not going to see anything because I don't have any posted transactions yet. Alrighty, before we go look at some other setup, let's go look at the item card for standard. The item card gets set up the same way. The only difference is the costing method. And notice that my costing method is standard. The unit cost field is grayed out, but the standard cost field is not. So standard cost means I'm going to periodically update this amount manually based on data that I've accumulated. Commonly in a production environment, this might get updated annually. And this is the cost it uses until I change it. I'll go back to FIFO. Let's look at some other setups that can impact costing value and when transactions or amounts flow to the GL. So let's go look at some other setup that's related to value and costing. Since I am in the RTC client, I'm going to use my search, and I'm going to go to Inventory Setup. And again, I'll point out, not all of you may not have these settings that you see here. You will see here that I have two different options, automatic cost posting, expected cost. If you toggle automatic cost posting, what that means is when you do agency orders / sales orders, it's going to basically flow the cost. Also means when you do an item journal, it's going to flow the cost. If you don't toggle this, you can still do costing, but to do costing, you're going to have to run the routine, the adjust cost at month end. So if people want more real-time costing so they can see it throughout the month, then turn on automatic cost posting. If it's not turned on or it's turned on, don't untoggle this without knowing the impact and talking amongst yourselves within your organization what impact that could have by toggling and untoggling that. If automatic cost posting is turned on, what that means is that when you receive product off a purchase order, the quantity is going to get updated in the item ledger entries, and the value is going to get updated in the value entries. It's going to put a value in the value entries in the expected cost. With automatic cost posting turned on, the GL is not going to be updated until you invoice that purchase order. On the shipment side, with the automatic cost posting turned on, when you do a shipment, the quantity is going to get updated in the item ledger entries, and the value is going to get updated in the expected cost. The GL is not going to get updated until you invoice that agency order or sales order. This is probably the most common setting I've seen because it's fewer entries in the GL when transactions do post than the expected cost. If you turn on expected cost, that means is that costs are going to post to the GL when you receive the inventory and when you ship the inventory. And then you're going to get additional entries when you invoice it. Expected cost, you end up with 3 entries for each transaction. The initial expected cost when you receive or ship, the reversal of the receipt or the shipment when you invoice, and then it's going to put the actual cost in. So depending on how many transactions you have, some people don't turn expected costs on because they can basically reconcile between what's in the GL, what's in their inventory valuation report, because they don't want to see as many entries that get created if they turn expected costs on. And when we go through some transactions, I'll show you some of the impact. You can turn this on, but just know that you're going to have 3 entries for each inventory transaction once you finally invoice that PO or when you ship that sales order / agency order. This automatic cost adjustment type and this document here, on page 17, there's a good explanation of what that does, so I'm going to go to page 17. I'm actually going to scroll down because if I just put in page 17, it actually takes me not quite where I want to be. So I'm just kind of scrolling down here. And this section down here where it says automatic cost adjust, and I'm actually on page, it is page 17. It talks about that next field that I'm looking at right there. So this field right here, this automatic cost adjustment, and what these different options do, whether it's day, whether it's month, week, is explained on page 17. And what that really means is how far back the system is going to go when you post transactions or the cost. But just keep in mind, regardless of how you have this set, the adjust cost will sync it up. But this definitely is a page that you're going to want to read through on your own to get a better understanding, if you have this feature in your database, what this does. All right, I clicked on the wrong database. In the food bank world, where this field also helps, is one of the things that food banks wanted is that when you received a purchase order, you wanted that unit cost field to update based on the cost on the purchase order, based on how this field is set. If it's set to something other than never, then the unit cost field will update on the item card when you receive. But before you start changing this, you're going to want to try it out in a test environment from never to something else to see, A, if it, what it does on the performance of your database, and if it ends up giving you the end result that you want. Because when the unit cost field changes, if you have cost plus, it's also going to change the unit fees. But again, when you have time, read through the document that's attached, what benefit this field can do for you. The next field has to do with average cost and how you want to calculate your average cost, whether you just want to do it on the item or whether you want to do it on the item, location, and variant. Since we're going to do an example of FIFO and standard today, it doesn't matter what we have for average cost because these run off of the costing method of average cost. I know there's at least one site that's using average cost. I don't know if you have these features in your database, but if you do, this may be able to help you with some of your costing with average cost. Alrighty, so there is that. These are those settings that do impact when cost posts and how cost posts. Alrighty, let's go ahead and go do a transaction so we can see how the information flows. So I'm going to take my test FIFO item and we're going to go purchase it. So I'm just going to do a purchase order and go purchase that. And as we're doing this, you're going to see how some of these costs do flow. I'm going to go back to that item because what I want to do is I want to make sure that we know what the amounts are when we're looking at the purchase order. Because what we have is we have a unit cost of 10 and we have a last direct cost of 0. We'll go to a purchase order. We'll go ahead and start a purchase order. Some of you may see fields that you're not familiar with, which is fine because they're specific to this database. All right, now I'll go down here to the line and I'll go purchase this item. I'm going to tell it which warehouse I'm going to receive it into. Let's go ahead and do 100. You'll notice that this direct unit cost field is blank. That's because the last direct cost on the item card is blank. If there was a value in there, it would flow to the purchase order. But because it was blank, nothing flowed. I'm going to go ahead and put $15 in here. So now what we have is we have a unit cost on our item card of 10, but we're purchasing this for 15. If we knew our item card was set up as 10, we could go back to the item card and change it to 15. Or in this case, we're just going to let the system do its work so that we can see that even if we purchase it for a different amount that's on the item card, the cost will get synced up with where it needs to be. Alrighty, so our total amount is 15. I'm just going to go ahead and put some additional information in here. Alrighty, so I'm going to go ahead and release this, and then I'm going to go ahead and receive this. I'm going to give it which bin. I have full warehousing turned on, so I'm going to need to give it a bin. Alrighty, so I'm going to go ahead and it's released. This is palletized inventory, so I'm going to have to do my pallets. This feature right here is specific to food banks, so I'll go ahead and create my pallet. Alrighty, I have my support of my lines, and if I wanted to, I could actually change the cost on these multiple lines. I don't see that very often, but it could be. One pallet could be one amount, another pallet could be another amount. So now that I have my pallets, now I can actually receive it. So I'm going to click on Post, and I'm going to receive it. As I mentioned earlier, when I receive it, it's going to put a value in the value entries off the item, but it's not going to update the GL. Well, let's go ahead and receive this, and then we'll go take a look at the item. So let's go ahead and take a look at another item, and we'll see how the value flows. All right, so I'm going to go back out to an item. I'm just going to go ahead and I'm going to find a purchase item, and we'll trace it back through. It's going to filter for inventory posting group. I'm actually going to come over here and do it because I happen to like the drop down. And so I'm going to pick EPP and co-op, and we'll find a purchase product. So here's a list of my different purchase products. Let's go ahead and take a look at our applesauce. And we'll take a look to see. So this one does have a unit cost. So if I'm here, if I go ahead and I click down on this unit cost, here's where you'll see the different layers. So you can see the unit cost of $12.25, so you can see it times, it was $1365.53. So when you drill down, this is kind of telling you a history. It's telling you how it's basically coming up with this $12.24. The same thing if you have average cost. Because again, it's just showing you the different layers. These same layers are stored in the value entry. So if I come to related information, if I go to item, entries, and I go to value entries, here is the history of this item value-wise. And you will notice that you have cost amount expected and cost amount actual. When you receive off a PO, it's going to update this cost amount expected. When you invoice the PO, it's then going to reverse that cost and put the actual amount in. So if you see this, this could be a negative, so it basically will take this, so this 650 goes with that negative 650, et cetera, on down. If you had invoiced your PO at a different cost and you had received it, then that would be reflected in the actual column. So, but this is just kind of the ongoing history of where it's coming up with the value. If we were to go run the inventory valuation report for this, for item 68099, and we wanted to cross-check against it, all we'd have to do is copy all of these to Excel. So I'm going to quickly do that. And when you take it into Excel, what you want to total is you want to total the cost amount expected and the cost amount actual. And that's what should be the value of this inventory. So when we run the inventory valuation report, we should see that $19,912.02. So let's go ahead and run it. The process for the inventory valuation report, and I'll cover this again, is that before I run my inventory valuation month end, I first run the adjust cost. So I first kind of close out my month, and then I run the adjust cost, and then I do the inventory valuation. So I want to go ahead and run the inventory valuation report just so that we can see if it cross-checks against that $19,000. I'm going to go ahead and I'm going to run it. I'm going to do it as of today. In this version, you can go back in time if you so choose. Some versions, you can only do it basically as of today's date. You can't go back in time. And then I'm just going to run it for this specific item. And yes, in some of your databases, this report runs very slow because it's going through all the transactions. It's summing it up. Let's see. Alrighty, here we go. So here is this 19,000. So when you run this report, what it's doing is this inventory value, it's summing up the value entries. What it's doing, it's summing up the cost amount expected and cost amount actual. You can see that I've totaled this, and it agrees with the report. Quantity is just summing up the quantity. The unit cost is purely a formula on this report. The unit cost is value divided by remaining quantity. So this unit cost may not be the same on the item card. It could be because it's purely a formula. If we were to go back and look at the item card, let's go see if the item card is showing 12.24. But at least we know where this came from. So if we go back to the item card, let's go ahead and bring up this item card. It's 1224, which happens to be also this 1224. But for some of you, we've gotten calls before that people will say this unit cost doesn't agree with the item card. And it may not, based on how, because this is just a pure formula of how it's calculating based on these individual lines. It could be off pennies, etc. So if I were to do an agency order / sales order now, what it would do, it would pull this unit cost. Let's go ahead for this item and do an agency order so we can see where this cost or value is coming from. Well, I made note of it with the 1224. We'll go ahead and we'll do an agency order. We're not going to process the entire agency order all the way through. What I want to show you is how you can see how the cost flows for that item. Alrighty. I'll go ahead and pick my agency / customer. I forgot to say yes to that warning that popped up, so I'll just pick another one, this time if the warning comes up. Alrighty, I'll fill in the fields that I need to. And I'll go down to my line. Basically, I'm going to sell, distribute this item. And we'll just make it really easy. We'll say it's 1. There is a field called unit cost. It may or may not be displaying here. But if it's not, we can go to choose columns and we can see if it is. I'm going to go ahead and add it just for this session. I don't recommend you add this because when people are doing orders, they will confuse cost with price and start trying to enter something in that field. So if I scroll over, right now there is no unit cost. It will get updated based on when this is processing, and what it will flow through is that 1224, because that's only the cost or value that it knows at this point in time. It will get synced up when you run the adjust cost. But you can display this, or you can look at it to see at some point, once we have more transactions in there, that does get updated, and that's where that's flowing from. Another way to see it, how costs flow, Go ahead and go to the item journal. And we will see okay, we'll go to the item journal. And when you're on the item journal, you will see different entry types. If I were to pick purchase and select that item, let's get rid of this line that I have right here. I don't want my key. If I do purchase and I type in this item number, you can see that that says we have the 1224, which is the unit cost, and then we have the 1225. Let's go take a look at our item and see what the last direct cost is on this item. And so we have our 1224. Let's just change this to 15. And see then if we go back to this item journal and we create another line, go ahead and get rid of that. I'm going to do purchase, type it in. And you'll notice now it says 15. So in the item journal, if this is purchase, it's going to bring in the last direct cost. If I switch back and let's do positive, then it will bring in the 1224. So positive and negative adjustment will bring in the unit cost from the item card. Purchase will bring in the last direct cost. So that's how the transactions flow in the item journal. If I were to set this to sale, reselect this. You will see that the unit cost is $12.24. The unit amount might be different based on this database because we can have lot costing turned on, but the unit cost, we can see that it's coming from the unit cost field on the item card. So in a lot of your databases, there may be different settings, whether it's base NAV or whether it's a food bank, that can impact what these are coming through. But if you basically don't have lot costing and a bunch of other stuff turned on, the unit cost will flow from the unit cost field on the item card. For sales transactions, positive and negative adjustments. For purchase, it flows from the last direct cost field. Alrighty. So at month end, before we get into some standard costs, what is the process that I go through and recommend? It's I first go through is make sure any agency or sales orders that have been shipped have been invoiced. On purchase orders, any purchase orders that have been received and I've received the invoice for that I have invoiced. Make sure all that's done. Then I run the adjust cost. Most of you should be familiar with the adjust cost. It's the adjust cost item entries. And this is the routine that you run that is basically going to sync up your transactions. What's one of the most common transactions that it would sync up? Let's say the one example that I was going to start with was going to be that purchase order where I received it at $10. I distributed it at the cost of $10. But then the invoice came in and I invoiced it at $15. When you run the adjust cost, what it's going to do, it's going to update and say, instead of distributing at 10, I really distributed at 15. It's going to do that syncing, and then that will also update the value. That's why you want to run that, is to be able to do that. When you do run the adjust cost, is that it's only going to adjust the cost on the transactions that have been invoiced. If it's still sitting out there and hasn't been invoiced, it's not going to adjust it. So some of your transactions may not get adjusted until they've truly been invoiced. So if you have some really old purchase orders out there that are stuck for whatever reason, and or if you have some sales plus agency orders that are stuck with quantities on them, you know, you want to try and work to get the quantities or get those transactions flushed through so you can eventually sync up the cost on those items and or revalue those items. Most of you, when you run this routine, are going to run it for all your items. I'm just going to run it for sake of time for a single item, so you can run it for a single item. You can run it for all of your items. You also have a field whether or not you want to post the index immediately to the GL. I usually will leave this clicked. I don't want to have to run another routine to post it. But some people, if they're not quite sure what impact it's going to be on the GL, they might untoggle this so they can review the report, then go back and sync it. But ultimately, if you've adjusted costs, you want to go to the GL. So you just run this, and it does its magic back behind the scenes. Probably didn't adjust that one transaction or that one item that I was looking on because I hadn't done any other transactions. But I run the adjust costs, then that's when I go and do the inventory valuation. I've already ran this, but just for sake of process flow, I come in, usually I'm going to backdate this to the month that I'm talking about, so I could backdate this to 7/31. I can tell it how I want to calculate it by. I want it by the value entries. The food bank world, we don't use variance. For profit world, people may be using variance. And then, so you could toggle that. If you want to break it down by location, you can. And again, for the demonstration purposes, I have that specific item again, but I could run it for more. Let's just run it for a couple more. Let's run it from, go through 8103. Friday, I'll go ahead and preview that. And so here it is. So then what I do is that I take a look. Does this value look reasonable? Does the quantities look reasonable? And if so, then I reconcile against the GL. So I already saw the 19,000. We saw where that was coming from. The expected and the actual cost of the value entries. Same place all these others are going to come from. Ultimately, if this was our entire, all of our items, this inventory value right here is what should be in the balance sheet of our chart of accounts. We've only run it for select items, so obviously it won't agree. The next report I run is where you can reconcile the GL to the inventory valuation. Is the report called Inventory to GL Reconcile. You'll notice when I did start doing the search where it came up with post-inventory cost to GL, if when you ran the adjust cost, you untoggled the post to GL, you can then run this function to post it. I'll just quickly show you what it looks like. It just basically, you can tell it how you want to do it. But if you already have post to GL clicked, then you don't need to run this one. I'm going to come back and find the inventory GL reconcile. So here it is. When I run this report, I run it based with the same filters that I ran my inventory valuation report. If not, you're not comparing apples and apples. So I have the same date, I have it by location. I'm going to go ahead and get details, and I have my same item number range. So when you're running this, if you're basically running this so you can reconcile the inventory valuation report to the GL or helping finance do that, make sure this report gets run with the same filter. What this report's going to do, and there's a lot of times that I don't print the details, because if you have a lot of transactions flowing through here, this can become a very lengthy report. But it's helpful if you're wanting to look transaction-wise how the value is changing, because that will help you. So if you see some really strange things happening, you can start saying, well, that doesn't look right on certain transactions, and then dig down into those. I'm going to go ahead and rerun this without the details. And all I have to do is unclick print details. So now I'll preview it so we can see that. So when you're looking at this report, this inventory valuation column right here should agree with the inventory valuation report. In this example it does, because I set it with the same filters. If it doesn't agree, check your filters on both reports to make sure they're the same, i.e. date, item number, range, etc. If you run it with the same filters and it doesn't agree, then we got to track down what's gone awry, because these two reports, it's summing from the inventory, from the value entries expected in the actual cost. So this is what's printing on the inventory valuation report. This over here is what's saying it's posted to the GL. In this example, they're the same. In some instances, they may not be the same, because you may have some purchase orders out there that have been received that have not been invoiced. If you had, it would show up here. The same thing if you had some agency orders / sales orders that had been shipped but not invoiced. It will tell you the reconciling differences. Because remember, when we first started, we only have automatic cost posting turned on. And what that means is that the GL does not get updated till we invoice. So in that example, these two columns would not yet be posted to the GL because we haven't invoiced the purchase order and we hadn't invoiced the sales order. So there would be your reconciling differences. Let's go ahead and run this for a wider range. We'll see how long that's going to take, because this database has quite a bunch of data in there. I tend to use my search in this version. You could also go find it under financial management. I'm going to go ahead and make this be wider just to see if we can get some more transactions. If it takes too much time to generate, then I'll go ahead and cancel it. But I want to see if we can get some received, not invoiced. Another way to do that is I could go look out my purchase orders and find some items on the purchase order, and then go ahead and do it that way as well. I'll just let this run just for a short while to see if it'll pop up, but if not, we'll go find some transactions on our purchase order. But while it's doing this, I wanted to see so far, kind of open it up to see if anybody has some questions right now before we move on to revaluing of inventory and standard costs. So far, does anybody have any questions? We have a quiet group. So here, when I finally ran this for all items, now you can see that what's been posted to the GL is a $1,926,000, and the inventory valuation is $1,954,000, and the differences are $28,000 of dollars that are sitting on POs where the inventory has been received but not invoiced, and on agency orders where there's $50 of inventory that's been shipped, not invoiced. You can usually control this column, ship not invoice, because you can just go invoice the order. Whereas on a purchase order, most likely you're not going to go invoice it until you get the purchase invoice. But this does the reconciliation between the two. between the inventory valuation report and what's been posted to the GL. If you're here from operations, i.e. inventory, you might not get too involved in this unless accounting asks you. So then if accounting asks you, you say, okay, let's go run this report so we can see where the differences are. But again, if you haven't vetted this total inventory value or this inventory value is wrong, then you need to basically look down and say, okay, is it the quantity set or off, or is it the value set? That's off. You'll also notice on this report that there is a column called pending adjustments. This will tell you if there's pending adjustments out there for this item. Let's go see if we can find some. I saw some. So like here's one. This happens to be a component in a kit. And so it's marked to yes. So I was going to see if I could find an item that was not a component in a kit that had yes. But if there is an item that has a pending adjustment that says yes, that might be one you also want to research, especially if there's no open purchase orders or agency/sales orders for it. But you can see most of these where there's no pending adjustment. Pending adjustment means is that there's a pending adjustment to the cost, i.e. value. So this report will help you in that area as well. Alrighty, before we get into revaluation of inventory and to standard cost, let's kind of recap what we took a look at for FIFO, i.e. purchasing. So I'm going to come back to the item card. I'll go back to my test one even though I wasn't able to do transactions with them. We'll call this test. We'll filter for test. And so again, so far here's what we found. Thinking really hard. So what we found is that this unit cost is a placeholder. It's a placeholder because it updates periodically when you post transactions or when you run the adjust cost. It's not going to necessarily adjust each time you basically post a transaction based on your setup, i.e. this may not update based on your setup when you receive, or it may update when you receive based on how you have different settings. But it's a placeholder until you basically run the adjust cost to sync up what cost you can. And then the unit cost should show the layers for FIFO. Kind of in the interim, it looks more like an average cost. And again, if you want to see some of the layers, you can basically click on this button, drill down and see the layer, like we saw in item 68099. And the same thing, you can look at the value and you can see some of the layers. This unit cost flows to the agency order/sales order, and it also flows to the item journal based on transactions with an entry type of sell, positive adjustment, and negative adjustment. This last direct cost field flows to the purchase order, to the direct unit cost field, and it will also flow to the item journal when the entry type is purchased. The cost field is what calculates into the fees or the price. It's not the last direct cost, it's the unit cost. If I come back to my item 68099, what you'll see is now that I have posted transactions, I will not be able to change that unit cost. Nor will I be able to change the costing method. What does that mean if you set up your item with the wrong costing method and you have transactions? Most likely you're going to be setting up a new item and moving the quantities in the dollars. If I try to type in another amount, it's not going to let me. Because from here on, the system does the work. I can input this initially, but not after I have transactions. All righty. Go ahead and clear out this item. I'm going to go find another item that has standard cost associated with it. So I'm going to set a filter. And we're going to do it based on costing method. And I could do that if I don't see the field here. We'll just come over here and find it. I'm just typing the letter C. I found costing method. So I want to find all the items that have a costing method as standard. Well, I know I have at least one. Well, let's go look at that one and make sure that it is a costing method of test. I mean, a costing method of standard. Don't know why it didn't find it in filter, but we have one. And so standard cost works the same way. The only real difference between FIFO and standard cost is that you can change the standard cost field at any point in time, even if you have transactions, because it is standard. It's common in the food bank world to use for donated product, and or some people now use it for the USDA when the value changes. It will keep track of that cost, and basically how it posts to the GL is controlled by the general product posting group. But basically it costs through based on whatever you have here. Alrighty, if your inventory value is wrong, how do you correct it? And how you correct it is based on your version of NAV. If you're on Series 2009 or NAV 2009, you can use what's called the Inventory Valuation Journal to revalue your inventory. When you do the revaluation, it's only going to revalue the quantity on hand. It's not going to go revalue something that you did in the past. So if you had a standard cost that was set up and that cost was wrong and it had been costing it for the last 9 months, revaluing it is not going to go revalue all those entries. It's only going to revalue what you have remaining on hand, whether it's FIFO or whether it is average or whether it is standard. So if you are using standard cost to value your inventory, it's important that the item card gets set up with the right standard cost, because you can't go back in time and say, well, instead of $10, I really meant to be $12, and have it go back and revalue all those transactions, basically the COGS, the inventory value, etc. The only thing that we can do is impact remaining quantity on hand. So if we come out to our revaluation journal, just under inventory here, under task, it's under called the revaluation journal. And you're going to want to run this based on, you can only revalue transactions that are basically not in process. So you come to your evaluation journal, and normally when you're going to run it, it's because you want to revalue a specific item. You're probably not going to run it for your entire inventory, because you're going to run into some error messages because those transactions are elsewhere, whether it's an agency order or whether it's out there on some other type of document waiting to be processed. You definitely want to know which ones you're going to be revaluing. But let's say we want to revalue our one item, the 68099. So what you do is you do calculate inventory. This is a warning. I've already run the adjust cost. It's going to kind of warn you that you really should run that first. If you have, then you can say yes. Because the reason it's warning you is because you want to make sure you're revaluing at the latest synced up cost. If not, you could end up revaluing it, run adjust cost, and then you're going, well, what the heck happened? So do go ahead and run the adjust cost before you do this. The posting date, I'll set it to today. You can go back in time if you want. So yes, you could revalue that inventory back in time. But usually people are going back just to like a month in. And I'm going to type in this. All right, so then I'm going to go ahead and click OK, and it's going to bring the entries in. So here it's breaking all the entries down. It's breaking it down by location, lot, whatever other parameters. And over here, when we're looking at the revaluation journal, we have the calculated cost and then the revalue cost. I can't update the unit cost calculated, but I can update the unit cost revalue. So I can reset these all to 15. What it does, it basically revalues the inventory over here and tells me what my net effect is going to be over here in the amount. So I've changed it. Let's even make that be even a higher amount so we can actually see it. Let's make it be 25. Once we have that, we can run our test report. I'm going to be brave and just go ahead and post it. Why? Because I know that if I didn't print it, I can always go back and look at my registers and print it. Alrighty, before we look to see what that did in the value entries, let's go look at our GL registers. If you meant to print it, you want to see the GL impact. I'll go ahead and filter this for myself, so we're looking at fewer entries. And I'll also set a filter for creation date of today. Alrighty. So we'll take a look to see the dollar impact. So we can see a lot of in and out. It's hitting our balance sheet account and it's hitting one of our expense accounts. I can also print that register. Before we do anything else, let's go take a look at the item card and see what got updated. Because remember, I said it, I revalued it to $25. Okay, so the unit, I haven't run adjust cost in, but I will, so it still says the 12. Let's go ahead and look at the value entry. And when we look at the value entries, I'm going to go ahead and add a filter, posting date of today. We can see it. So here's all the revaluation. The revaluation entries get stored in there. And these are actual amounts. Go ahead and rerun the inventory valuation report, and then we'll run the adjust cost. See if we can get that unit cost to get updated. Okay, so I'll go ahead and run it. I'll go ahead and run it and I'll set it to today. Again, if you're going to run this, watch your date, because I revalued that as of today's date, so I need to reset that. I'll just go ahead and run it for that. How do I know to look for those dates? Because I've gone awry and not updated my date. So now you can see, before it was 19,000, now it's 40,000. You can see when we value it, it's now all the locations are at $25. So that's the 40,000. Let's go run the adjust cost for that item. See if we can get that unit cost field to get updated. If it doesn't, I'll have to research why in this database it's not. Because it should. And there it went. So you notice after I revalue my inventory, this does not get updated until I rerun the adjust cost. So it's kind of like you run the adjust cost before you revalue, and then you do it afterwards, because that adjust cost, like I said, updates this. And now if I click on the ellipsis button, you will see that layer coming on down here. So that is how that works. That is inventory costing valuation kind of in a nutshell. I'm going to open it up for questions if people have specific questions that they'd like answered. So feel free to ask questions. There was one question on that purchase order that I was getting. It was saying the error is not related to dimension. The error message really has to, go ahead, someone? I don't know if that was just feedback of me. So there was one question. It says, is the error not related to dimension? It is, but it has to do with some finance enhancement functionality that got put in for self-balancing of funds and dimensions. And there is some setup that I could go do on the source code to see if it resolves it. But instead, I chose just to go to a different transaction. Most of you will never encounter that. The next question comes through is, why does purchase variance happen? So I need to ask more questions on that. What is the costing method? Are you talking about purchase variance on standard cost? Are you talking about purchase variance on FIFO? So my next question, is this related to that you have stuff going through a purchase variance count in your, so give me more examples of as to, okay, we'll come back to the purchase variance. If people do not have this ellipsis button, so I'm going to have to ask Lisa. Lisa, do you know what version of NAV you're on? Some versions you may not have this, because inventory has been enhanced in just about every version that's been released. I would say most of the, I don't know everybody who's on here, but I would say I know some of you are on 2009, but if you're on a version lower than 2009, you may not have all these features. Okay, so that was on version 4. You know, I'll check to see if it is in base NAV in version 4. I don't know specifically when this drill down came about. So I'll get that answered offline for version 4. If you don't have the ellipsis button, how do you see the layers? One question was on the purchase variance. So what I'm going to do is I'm going to come into the matrix. I call it the big bad boy. The general product posting setup. The general posting setup. So if you're getting because I think the question might be related to, why do we have stuff going to a purchase variance right here? Normally this account should not get hit unless you have standard cost. So if somebody has some stuff that is going there, could be based on the initial invoicing of the inventory. Because when you have automatic cost posting turned on, what it does too, and I can send you a document as to what GL accounts in this matrix that it hit. But with automatic cost posting turned on, ultimately what it will do is a debit to the balance sheet account inventory, a credit to the payables account when you invoice that purchase order. In the interim, it does another transaction where it does a debit to the purchase account and should be doing a credit to the direct cost applied. So if some of you have some amounts going through a purchase variance account here based on this GL account, and the items are not standard cost, then we have to take a look to see really what's going through these GL accounts. And then when you do inventory adjustments, it does there. But it looks at this to know what GL accounts it's going to go through and post to. If we have any other questions? Okay, not. Okay, so some people have basically requested the document on the posting metric setup, so I'll get that sent out to the entire group. Again, it's going to be for a specific version, but still, it should be helpful to everybody. And I know I have some follow-up with Lisa as to what the equivalent of the drill down on the unit cost field on the item card is. Are there any other questions? If not, this concludes this session on inventory costing. Thank you, everybody, for attending.